Welcome to Dukascopy TV. Joining me today is Bruno Estier, a technical analyst. Welcome, Bruno.
Good morning, Alex.
So let's start off with oil prices. Last month, the main event was decline of oil prices. How do you see that as a technical analyst?
Well, we take a big view from 1985 to 2015 on 30 years. Here we have a quarterly charts. And what we see is very interesting. We see this blue line rising from 1998 to 2009, and guess what? It just has been touched around 63 levels last week, and it could offer some support.
So how do we know that the decline is over?
Usually in advance you don't know where, but you have a chart, and the chart gives you some support levels. So we saw this long-term rising trend line, and we see also more recently in 2009 some support level around $63–60. And we also noticed on the lower part of the panel here on the stochastic oscillators, momentum oscillators, that the momentum has been down for quite a while, and it is probably a little bit bottoming.
So do we have any other signals?
And yes, by chance we also have other signals, because we know oil has some impact on some equity, namely the equity subsector energy. And on the top part of the charts here we have the relative strength of the energy sector versus the S&P 500. And we see this orange line is coming down all the way to December. Also on the price action we saw some big actions last week, and basically a retest of the October low near 77.50. So we had here a low around 78, and it looks like there is a reversal, because we see this white candle engulfing about the last black one. So here we can expect that there will be a rebound, and we would not be surprised at all to see also the oil price stopping its decline and making a pause.
The lower oil price has helped some equity markets. What else has it benefited?
Well, it certainly is helping a lot of markets in Asia, for example, Japan. Japan imports a lot of oil, and therefore it has a big impact on the equity market if oil is lower. However, as we noticed here already for a few months, the rising relative strength of Nikkei versus the S&P 500, which is moving up here on the dotted line, has been helped mostly by the decline of the yen. And that's why we had this nice rise towards 17,500. Now, maybe the declining oil price is giving a little additional boost, and what we see recently is a break above this 17,500 resistance and a move probably toward 18,200, which was our next target. Also, if we look at other emerging markets, we see that Indian market here on a relative strength basis versus the other emerging market is outperforming very well, because this line, dotted line, is moving sharply up, which is also moving up against the S&P 500. So we do have in India a very well established uptrend. And another Asian market, the Chinese market, there the impact is a little bit less explicit, because we are still in a trading range here in the ETF for China. But it has still a bull bias. It's establishing higher highs and higher lows, and therefore the highs of 42.50 in October should be seen again.
And what is the impact on Europe?
On Europe, in fact, in the last 3 weeks we had a big change from a technical viewpoint. Here in the middle part of the panel we have the so-called relative strength of the Euro Stoxx 50 versus the S&P 500. And after a long downtrend, we noticed a very sharp rebound. Such a rebound that it's moving above the moving average 40 days of that line, and also breaking above these Bollinger Bands, indicating higher volatility and therefore a sustained uptrend expected in the future. So we see that in the weekly chart of the Stoxx 50, which was not yet at a new high compared to the S&P 500, which is already for a few days and weeks at new highs, we see that we are reaching toward the previous high of September, and we should then move upwards toward 3,300 in the coming weeks, possibly early in next year.
Will these markets continue to rise, driven by the US markets?
Well, probably it has been the case so far, and we can see here on the daily chart since October 16, the S&P rising very relentlessly without any pullback. Okay, no black candles almost in this move. It's slowing down a little bit. Probably this slowing down is due to the fact that there was some internal rotation between the energy stocks moving down and other stocks moving up, for example, industrial or discretionary. But what we are looking here is probably just a minor correction between 2075 on the S&P as a resistance and 2040. And we should not expect very deep pullback on the S&P 500. So this S&P 500 is going to be still a leader, and we should all enjoy a relatively nice Christmas in the coming weeks.
That's great. Well, thank you so much for coming in for technical analysis.
You are welcome.
We'll be seeing Bruno again in January. So hopefully you'll join us then here at Dukascopy TV. Goodbye.